So, as mentioned, the US President Donald Trump pressing ahead with his tariff war, announcing new 15% global trade rallies to replace the ones struck down by the US Supreme Court. This has added confusion to the outlook for global trade. We're joined by Michael Zinn, Managing Director and Senior Portfolio Manager at UBS. Michael, thanks very much indeed for joining us. Michael, I think there's a school of thought that the market has become hardened to tariffs and they're not such a big deal. What would your take be on that?
I think that the market has largely digested tariffs and continued kind of in a trading narrative that reflects that. And some of which I think you're seeing, there's just a new trade regime. There's more emphasis on supply chain securitization, onshoring, and it's all happening when you have a fairly good global growth cycle. So I think those things are all kind of coming together to result in what we're seeing today, which is a kind of a re-rating of domestic, tangible, dirty industry stocks, materials, industrials, energy. And we're also seeing it, face a challenge or cause a challenge to the tech sector that we've known and loved for many years. That's suffering as a consequence, I think, of all those factors coming together.
It's interesting that you mention polluting industries. America, to become truly more self-sufficient in copper, would need to build more smelters. But I don't think many people want a smelter in their neighborhood.
Yes. Yeah. The not in my backyard phenomenon definitely has been alive and well here in the U.S. And, to some degree, I think that's also led to some really strong performance in a lot of the emerging market sectors, because they, of course, have their mining capabilities already in place. And so the U.S. is clearly trying to emphasize more capability in that area, but it's a long road. But it seems one that the U.S. is committed to. So between materials and mining, abroad and also here in the U.S., those have been sectors that, although they're more speculative in nature, the more cyclical in nature, we've been putting more emphasis on putting capital in those sectors because that seems to be where the tailwinds are strongest.
Have you been putting money into the electric utility stocks, for example, in the belief that electricity demand is going to surge?
For sure. I mean, obviously the most standout example has been nuclear power, and there's a great emphasis on restarting a lot of those facilities here. And the utility sector overall has been, I think, a big beneficiary of the somewhat risk-off kind of tone of the market this year, and the fact that rates have gone a lot lower too. So we think the utility sector should continue to do relatively well. So we like some of the non-regulated power generation elements, of that space, and we like the regulated space as well for utilities.
What about the Mag 7 stocks? NVIDIA obviously reporting Wednesday. Are you underweight, overweight in those stocks, or can you generalize? I know they're very different companies.
They are different. We've definitely been drifting towards underweight Mag 7 after being overweight them for a super long time. It seems like there's a bit of a clash of the Titans phenomenon going on, where they're competing with each other more and more so now, and also facing pretty stiff competition from some of the big mega private players, some of which may very well come public at the end of this year. So there are definitely challenges there. There's no question. Having said that, I think there are positives too. It's obviously a super crucial platform, and we've seen, particularly in Asia, incredible demand for memory chips. I mean, those sectors have just been absolutely going to the roof. And I think logically, it's reasonable to assume that super strong memory chip demand is going to translate into very, very strong cloud demand. And obviously, the Mag 7 has a near monopoly on big cloud infrastructure play. So we would expect at least that to be a bright point when we get into the reporting season next quarter.
And big pharma, you think it could be a major winner in AI, just focusing research, allowing big drug companies to explore more potential products?
Yeah, I think so. I mean, we've heard some of this from the CEOs recently, and consequently, we've seen that sector do very well, and then we've seen the whole set of vendors who supply that sector in tools and diagnostics and that whole area suffer a bit. You know, the need for extensive research expenditure on clinical trial work, that may be more limited. They may be able to bring more of the research in-house. They may be able to simulate more of these through modeling. They're obviously creating their own LLMs and their own server sets, and they have the cash flow to do so. So that makes some sense to us. So we would expect the outperformance of big pharma to probably continue as a beneficiary of AI.
And just finally, what about fixed income? Just remind us. I don't know if that's a big part of your day's work, but
Yeah.
are you comfortable with, say, 10-year bonds in the States right now? Say you had a 5-year time horizon.
Right. It's a great question. It definitely is a part of our work. And I would say we're more comfortable with sovereign debt than we are with credit these days, which has its issues and still are trading in pretty tight ranges. Of course, the 10-year, and you have the graph up there now, is at the lower end of its range. And, you know, I think there is one argument that is somewhat appealing as we go through these kind of doomsday AI scenarios, you know, where all of a sudden we get a surge in unemployment, we get a very, very strong deflationary impulse, that maybe a 10-year treasury isn't a bad hedge against those things if we do see a low inflation, low employment environment. It's not our base case, but I think as we've seen a pretty strong economic growth here in general in the U.S., but one that's without much robust job growth, that having some 10-year kind of exposure does make some sense as a hedge against these other headwinds the markets seem to be facing these days.
Michael, thank you very much indeed. I'm Michael Zinn, Managing Director and Senior Portfolio Manager at UBS.